Alright guys, welcome to this live class, free live webinar I should say. This courtesy of Golf Course FS Academy. Alright, what we'll be delivering straight to the point is how you are going to win in the forex market, even if you have never traded before. Okay, it's suitable for newbies, suitable for people that are almost giving up their trading career. Alright, my goal here is simple: to make you profitable in the business, because I'm going to reveal to you the secrets of the business, what the top 1% of the 1% are aware of in this business. All right, now if you stay to the end of this training, you're going to discover the same secrets which I was given privy to, I should say, that has helped me consistently make the market for over 3 years plus. And you're going to discover how you can apply this same skill even to trade binary, and I should say crypto market as well. And you get a chance to get our today only offer, which is not going to be anywhere else other than after this webinar. All right, now what makes this different is different because you're going to learn pure price action in a way you have not seen it before. That's a guarantee. We have spent years mastering this method. I personally and all of my colleagues who spent years mastering this method. We've been through the trenches of what you can mention as far as forex or trading is concerned. All right, who's speaking, who's teaching? I'm Jay Okoli. I'm a Nigerian from Delta State, studied biochemistry in the Nigerian University. I'm about to get married also. All right, that's my shiny eyes right there. Just did a headshot just for this class. All right, now let's proceed. I have done a lot of things right in the past. Okay, I have trained over 200 students in Nigeria and diaspora within the past 7 months. All right, I've raised a $100 account to 5K account within 3 months. I've won several demo contests in brokers like Light Forest, Shaping Market, etc. So I've done some things, okay, and I still do things right. But also I've done a whole lot of things wrong as well, because we're all humans. I blew my first 3 forex accounts, yes. And when I say I blew account, it's not $100 account, it's in thousands. You may wonder why that much. I was too confident with what I thought was working at the point in time, and because of that I almost dropped out of school, because I gave one of those accounts to a what's it called now, Signal Pro, is the account manager, to trade for me and all of those stuff. I had given up 4 times already in the past to never trade forex again. In fact, I got so indebted at one point in time and I was on the run. All right, 4 times I had given up not to trade forex again, until 2017 when I finally encountered my mentor. All right, and then I learned I learned a whole lot of things which I'll be revealing to you, but top of the list was I learned that the market is controlled and manipulated. I learned that the forex market trading there is a whole. Now what do you think? $6 trillion in open float in the market, and you think it's not being controlled or rigged? Come on, you have to rethink. So that was the first thing I learned. I learned that it's rigged against the retail traders. All right, and no matter what you trade less than $1 million, several millions of dollars, you are a retail trader. Even if you have $1 million account, if you don't have the knowledge of what this happens, you are a retail trader. All right, and I also learned the only way to win is to know the character of these guys that rigs the market, and then to trade in line with them, such that the stop loss of the retail world will be where your take profit is going to be. And I'm going to deliver all of those as you're going to see in this training. And I discovered this the hard way. I've told you how I almost I gave up more than 4 times or so, lost all of these things, and this I discovered the hard way. And what was the hard way? After I lost a lot of money, what was I doing that didn't work then? I drew and mastered trend line, Fibonacci, MACD, support, resistance, demand, supply, name it. Almost every tools that are in the forex markets, I mastered the usage of them. I mean, it was crazy. It was crazy. All right, I did lots of breakout trading and all of these things, close trades too early, and even when I was right, I was I left my winners. I clicked out of winners too early, and I left my loss longer. Okay, so terrible stuff. In the past I've used all this crappy stuff and I didn't see consistent results. At most I broke even and lost most of the times, and I told you already, blew my first 3 accounts in several thousands and all of the stuff. Now if you are good or you are having consistency, because what we are selling right here, what I'm going to teach you, what you're going to learn in this training, is not about this or that method that will give you some 50% win rate and all of those stuff. What we're talking about is consistency. You want to be consistent in your trading, right? You might have had some results like I did when I did all those trend line and all of those support resistance, but the issue I had was consistency, and that's the issue. Consistent profitability. Whereas there are no 100% anywhere else, but you can be more consistent in your win and make a living for yourself, and that's the reason for this class. Now we'll be looking at 3 reasons why traders lose money and how you can win more trades trading like the bank. So we're basically looking at how you can start trading like the banks. Okay, now but we must talk about the 3 reasons why traders lose money, that makes them leave the market. And the 3 big reasons are: number 1, the psychology of traders. Trading is 70% psychology and 30% strategy. I'll say that again. Trading is 70% psychological and 30% strategy. So important. Some guys want to get rich overnight. Some guys want to do things. They are just all over the space, the Instagram, all the trading. They are watching traders lifestyle, what is happening, what is trending, and then their ego gets fueled up. All right, psychology, it's so important. It's not a get rich quick scheme, all right, but it's a get rich nonetheless. But you have to build it like a business. Over trading kills it. And I'm not going to sit here and start telling you about all the rules and all that. We have a training that covers all of those, and at the end of this training, if you stay the end, there's a link to our Telegram group which I'll give you access to other free trainings, right? Number 2, risk management. Some traders are gamblers, all right. Risk management, bizarre risk management. Why traders lose money? You have $100 account, for example, and then you are trading astronomical lot size. You're trading volatile pairs, too many position, exposure is too much. By the book, you are to reach 2% of your account size per trade, but I'm going to teach you how, once you know you are right in the market, you can risk or putting up to 70% of your account size and make a lot of money. All right, but that is not what we teach. As a professional trader, you must learn to manage risk effectively, because again, there are no 100% anywhere, and I'm not going to sit right here and waste your time telling you what I'm going to share with you is 100% accurate. All right, so for the little knowledge, no matter what percentage that you're getting as a trader, one of the things that will add it up together for you to make you consistently profitable is that you are managing your risks very well. So important. Again, there are other training video, you're going to get that if you want to know more about risk management. And then the strategy. What strategy are you using to trade? Most guys are gamblers. Like you see, gamblers trade strategy. They use the MACD, they use the Bollinger Band, squeeze, breakout, trend line, all of those, etc., etc., candlestick, and many stuff. All right, and this is where we want to really stay today in this lecture. All right, now let's get down to business. We're going to explain a few terms for you to understand. Now I encourage you to take notes. If you're busy, maybe you pause this video, return to it later when you are less busy. It's not going to be a very short video, and I will not make it too long as well. All right, I'll not make it too long as well. Now the first thing we're going to look at, you see the terms you must understand right there. All right, you see the TDA, which simply means top down analysis, market efficiency, order block, breakers, fair value gap, equilibrium, premium, discount. So I'm going to take them in no particular order. I'm going to head over to a whiteboard and share my screen with you. All right, so let's proceed. Okay, all right, so in no particular order, we're going to look at equilibrium, premium, discount. Now what I'm sharing with you does not have a time frame. I'm going to say all of this as quickly as I possibly can, and I will head over to my MetaTrader 4 platform to show you how all of these things applies. Okay, so equilibrium, premium, discount, and the rest. So equilibrium simply means, normal English, equilibrium is midpoint, right? Midpoint. Again, you have to take notes if you possibly can, because these things are so important. Now for equilibrium simply means the midpoint of any defined range, Now, whether you are looking at the 1 hour time frame or the 15 minutes 15 minutes time frame, daily or whatever, let's assume this is a range or a trending market, right? Now, if I plot what's it called, my Fibonacci from this high to this low here, the 50% line from my fib will be my equilibrium. So for any particular range of study, your equilibrium is the midpoint of that range. You will see how these things applies as we continue. Then premium. What is premium? Premium is the top half of that range. I'll denote it as P. Premium is the top half of a defined range. Now, the premium of a particular range may not be a premium in another range. So that makes sense. All right. The premium of this range we defined is a premium here because of this equilibrium that is being gotten from the range, right? Why that is important? Another thing to know about premium is that premium is a place where you look to sell. All right, is a place you look to sell, not buy. The top half, the top 50, you look to sell from a premium. So you sell from premium. Discount, I'll denote as D, is the bottom half, right? You look to buy at discount. You look to buy at discount. Again, this is fracture, whether it's the 1 hour time frame, the H4, the daily, monthly, or weekly, whatever pair, the same thing, binary, crypto, whatever, this principle applies. You buy at discount, you sell at premium. All right, all of these things will come together. Now, order block. Remember, we're looking at how the banks trade. Okay, order block simply means where the banks entered the market. All right, and they always leave you with a trace or a proof of their entry. Now, write this somewhere in your notes. Write this somewhere. The banks or big institution, they sell at a bull candle, or they sell at bulls or up candle. All right, they sell at bull candle and they buy at bear candle or a down candle. They buy at a bear or down candle. You're going to see how this implies. So just write that somewhere. Now, order block, obviously these are not my terms. I'm not going to take credit for this, and this video might be taken down for a work. Okay, so if you're having this, make sure if you can download it, please download and have it for your own further study. All right, order block. There are two order block. You have the bullish order block, all right, and then the bearish order block. The bullish order block and then the bearish order block. Okay, now let me give you a lead. Order block is such that once you see price or market moving to the downside, for example, aggressively, okay, the last bull candle before the downward movement of price that leads to or led to a break of market structure is what you refer to as your bearish order block. In this example, I'll show you in a chart shortly. Okay, when price moves downward aggressively to break a swing low, okay, there is a bull candle or an up candle usually presented before this downward movement. That up candle before the downward movement is called your bearish order block. All right, now the down candle, opposite speaking, the down candle before the upward movement of price that broke a structure is what you call your bullish order block. All right, so you refer to as your bullish order block. Now that's that. It's as simple as that. Okay, so I am going to talk about market efficiency, which is a very important thing you should know. Now, for price to be delivered effectively, okay, they have to be market efficiency. Now, let me explain market efficiency for you. Now, assuming you have a falling market or a bear market, a downtrending market in form of these three candles that we are seeing right now, assuming these are all candlesticks, okay? For this market to be effectively traded, this mid candle, which will be our area of focus, will have to be covered very well in a way that the candle before it and the candle after it ought to overlap in it. What do I mean? This candle should have a pin as its low, and this low of this previous candle ought to coincide with the high of this next candle, such that they should coincide symmetrically or perfectly. Okay, for this one, which will be our next area of focus, for another candle, being if it's a bearish market, to be traded effectively, they have to be that high of this candle should perfectly coincide with the low of this previous candle, okay, such that you say this particular mid candle is effectively traded. Now, in a case where you have another candle or candlestick where this thing now exists, there is no wick that interlap that coincide with each other, it will present what you call inefficiency in the market, or a gap in the market, which would range from the low of this candle here and the high of this candle. And this gap, this is not a very good diagram, this gap, which we call fair value gap, okay, has to be filled. It has to be filled, but not always immediately. Price has to in future come all the way to fill this gap before it continued the direction. So that gap there will pose what we call market inefficiency, all right, or a fair value gap or a liquidity void, whatever, and that will look to be filled in time to come. All right, there are other things that we're not going to talk about because of the scope of this class. Okay, so all of these things we are sharing, how do they concern your trading? How do you use these things to effectively trade the market? Okay, so I'm going to head over to my MT4 and show you the terms that we have discussed. Obviously, we have talked about, right? So this euro, pound, dollar. Okay, this pound, dollar, this is the daily chart. But let me head over to the 4 hour and let's look at some of these things we have. Now, the first thing we discussed was equilibrium discount premium, right? Now, I said that is with respect to any range you are looking at. Now, this is the current market, okay? From this high to this low would form a range, if you like. But I want to look at this high all the way down to this low as a range. So, I'll bring my Fibonacci tool, put it from the high, and draw it all the way down to the low right there. And straight away, I'm going to take my 50% retracement, which is this area. So this point is my equilibrium with respect to this current range for pound, dollar. All right, so everything above we said is your premium, everything below we said is your discount. And you can see our price, although there are reasons why price is reacting this way, which we are going to look at shortly, but we just have to explain the terms, show you in recharts. Above is premium, below is discount, right? Great. So I'm going to take out my fib, take it out, and look at other things that we have discussed. Okay. Okay. So, okay, one other concept I think we have not talked about is liquidity pool. Liquidity pool. Yeah, I know I gave us mitigation and rest, but obviously I don't want this video to be so long. Liquidity pool simply means where the liquidity of or where the money is in the market, and there must be a way for you to know where these things are. All right, because the business is all about where the money is. Forex, binary, crypto is all about where the money is. Okay, now if you are selling a market that looks like this, look at this. If you are selling a market that is going like this, maybe you entered your sell right there, where will your stop loss be? I guess above the structure, right? Great. If you are buying a market that presents this opportunity, where will your stop loss be? Below the structure. So that tells you something. the liquidity of the market or the money of the market is behind equal highs, like in this case, equal lows. Please take this down. Equal lows, like in this case, swing highs, like in this case. This is a swing high, stop loss is there, stop loss is here. Swing lows, this is a swing low, these are swing lows, stop loss is here, stop loss is here. Okay, so when you open a chart, the first thing you should be looking at, among when you've done your discount and all of those stuff, is where is the stop loss of traders placed? Where is the stop loss of traders in the current market? All right, look at this area right there of equal highs, H4 chart. Okay, and those are areas where price would want to go to take out liquidity. Now let me say this very quickly. After, there will be no reversal or retracement of price unless liquidity has been taken. I'll take that again. There will be no reversal or retracement of price unless liquidity has been taken. This is so important. So that's by the way. Okay, now let's look at the efficiency we talked about. Now look at this candlestick here. Look at how price traded all the way in this particular candlestick. I don't know if you can see my chart. Okay, traded all the way down, and when it came down, it just delivered only sell side, massive candle. Okay, massive candlestick to the downside. Now this candle needs to be balanced. The next candle came to this point here. So all the way, let me drop a line from this low of this previous candle to the high of this next candle. There is a void that must be balanced here, that has to be balanced. Now I said it will be balanced even if it's not immediately, but you must see price going to balance that fee. And you can see exactly that's what happened here to the peep by some, I think it missed it by some fraction. Now you can allow some little bit of disparity, because when price came to this level, the spread of the broker actually filled that up, and in fact it did fill it up and exceeded it right here. Okay, so that's void being covered with this candle. Now what I just said right now, you can see it in any time frame, monthly, weekly, daily, whatever. Okay, you just have to know how that goes. Now this is an order block. Why is an order block a bearish order block? Because the last bull candle before price came all the way to the downside and broke a structure. Although this is not a very clear structure, but this low here was broken. Okay, so you see price came back to fill the void, came back to the order block here and here into it, and then sold off. It came to it and sold off. You are always going to see this in price. Why this is important is that, please take note, the order block tells you when the dealers are in the market. All right, it tells you when they are in the market. Now, because of their enormous amount of money, their orders are not usually completely filled. Part of their orders are what is going to be filled, right? So they will create that order block such that price will, let's say they have $1 billion to sell in a market. They will, like I told you, they sell from the bull candle, right? They are going to sell like part of it, like say $500 million. And then because it's a zero-sum business, the market has to look for people that has that $500 million in opposite float so that the thing can be balanced. All right, but usually it's not. They don't usually get balanced immediately. So price will have to rally back to the order block and take up the rest of the order while the rest of the traders are buying. But it will get to that point where the orders are filled and then sell off to the retail traders to balance the equation. Now this presents us with two unique opportunities. If you are smart, by now you should have known. Number one opportunity is either you wait for price to return to an order block and you sell or buy accordingly, all right, or you, in this particular case, price is trading back to this order block. Let me zoom that in so you see. Let me zoom that in so you can see that. It's either you wait for price to return to an order block so you can sell with it. Okay, now this was a low, right? That was broken by all this movement, structure break, and where is the order block right here? This bull candle. So I'm going to move my order block right there. All right. So it's either you wait for price to come to this order block before you look for your sell, and usually once you sell in this particular scenario, your first target will be the previous low that was created, because what is lying right here? Liquidity. Okay, liquidity. And you can see this candlestick already is already posing a void, so that they are going to fill this thing. Okay, this one, okay, let me give you the two opportunity. The first opportunity, either you wait for price to come to the order block and sell off with it, or buy with it in a buy scenario, or you are going to move with price to go to that order block. You can actually buy in this scenario with this moving market, knowing that it's going to move all the way to an order block. All right, now what is actually happening here? Look at another void or market that was getting filled. Look at this candlestick right there. Look at this massive block candle. Don't know if you can see it, and it was not efficiently traded. This one filled up to this point, leaving a void right here. Okay, even this one, there's a void right here. All right, or there was a void right here. And so when price is rallying to the upside, this candlestick filled up this void very well, and this one had just filled up this void very well. So where is price going to most likely retrace? This order block, because of what we have seen right here. So we are looking at this 37.49 level, respect when you are watching this video, for price to retrace. And so you know, I'm not cherry picking. I didn't even plan to use what's it called, GBP USD or this particular example. You're going to see this all over the place, all over the place. Let me zoom right in again to show you this. So I don't want this video to be so long, right? I'm just going to go back to some record. Okay, look at this structure right here. Look at the bull candle that led to this. Look at this low. Liquidity void, liquidity pool is resting below that low. Let me show you with a trend line right there. This low is very fine, so the dealer are eyeing that low already. So I'm just going to extend that. So look at this bullish order block, bearish order block that led to this market breaking of this structure. Now price, we're looking for price to return to that order block right there, to this order block, and sell off. And you see how price came to the order block, sold off, and what's your first target? The low. And could you see how you could have traded buys with this order block to this point, and or you buy with it, you take your profit here, or when it gets here, it waits for confirmation, you sell with it, your target profit is this level. And you see how price came to that level right there, okay, and sold off. You see price came to the other block again, one to multiple times, and eventually broke this low here, massively. This here was another order block, okay, and it's on and on and on. Now obviously there are other things you need to know about order block and all that. Now it's beyond the scope of this training, okay. Now if you enjoyed this training, listen, I am not doing this to sell anything to you. What I just said, if you replay this video again, okay, and do the work, like back test what I just shared with you, you are going to make a killing in trading, whether forex or binary. Okay, so I'm going to return to my slide and share something very important with you. Okay, now look at this. Okay, sorry, I just had to run through this. Now the simple trade strategy I just gave you there: identify a break in market structure. All right, now this is just one of many of the way you can trade what I just shared. Note the other block that sponsored the move. Either you wait for a retracement, like I told you, you can either wait for retracement or trade the retracement, then zoom to a lower time frame and take your trade, put your stop loss and take profit. Of course, you should know the pair you are trading and volatility. Now one thing that's going to help you, you want to be very selective. All right, selectivity is king. I'll take that again. Selectivity is king. Okay, now a quick disclaimer: there are other things you should take note of which is beyond the scope of this training. However, this what you've seen should suffice for immediate result. Like I told you while we started teaching, that there are other videos should you want to learn more on all of these things, that is in our free Telegram group, which is in this page. You can actually access that, and but there is something better for you. there's something better for you. Now I want to ask, the past hour or minutes you've spent with me, would you agree it's been worth the time spent so far? Would you agree it's been worth it? And obviously, you know, we couldn't cover everything for just one webinar, even if we had all day. That is just the truth. Now, there is a special offer which you're going to have today only if you really want to know every single thing to effectively milk the market. Now, if you act fast, I'm going to give you a very special deal, a very, very special deal. You will be thrilled because most guys called me crazy. All right, I mean in a positive way, because it is not in any way. You can't see this thing, this what you are going to be gaining access to. You can't see it anywhere. I am boasting on that. With the way I explain it and teach it, you can't see it anywhere. All right, now this package you're going to get access to, who has it worked for? Persons who has never tried. So whether you are a newbie, if what I said in the past few minutes made any sense to you, then it's going to work for you. Okay, if you have lost a lot of money before now, you have done all you could and all you can. Okay, this is going to work for you and you're considering to give up, please, this is going to work for you. Then if you have no clue, even if you have clue about some of this method, but yet you're having issues finding consistency, then this is for you. All right, now a few testimonials. I just wouldn't waste your time, because see at my far left, someone that we're running the test program for in the month of August says, sir, he made over 290 pips trading this method with a 0.01 lot size. You will see another person using the method, discounts and all of these things, and you could see the far left, far right, sorry, this thing works in binary. Okay, it works in binary. You could see all of this is just one trade. You don't need much. You could see other testimonials and all of these things. All right, our class in August mentorship, you will see the student. I gave the call in KJPY. You see how they milk it. The one you see at the far left, use indicator. Obviously that's not my trade, but the same method works anywhere and everywhere. All right, now for 100 persons only, which is going to be the last class we'll have for 2021. Anytime you're seeing this video within the last this should be August as at the time of recording, we are going to just do this for just 100 persons only. It's a brain dead offer. Listen, I am not going to sell you, because if I ask you to give me the money for the value of this video on its own, it's worth over $1,400 for just what you know. But the whole package of its own is worth over $9,000. All right, but we're going to put it at a crazy discount fee for just 100 persons. What you need to do right now is click the button right now below this video and see if you are qualified for this. All right, once you are qualified, you think it's for you, you sign up, you'll be added to the class, you have access to the whole materials that is worth over $10,000. I'm going to hand it over to you, plus videos we've made and prepared. You're going to see everything as it is. You are never going to need signal from anybody again, from it, not even from me. You're never going to need any join any group for any single thing, and so long as you are trading. Okay, but again, it's just for 100 persons and the time is ticking. All right, so click the link below this video and see if you are qualified. God has blessed you.